Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering some issues with making pass-through entity elective tax payments and what you need to know about the process. We cover AB 150 extensively in our federal and California tax update webinar, and you can get registered at caltax.com under the webinars tab. We've heard from many of you that there have been some problems making pass-through entity elective tax payments. We've been working with the FTB on these issues, and here's the full story. Under AB 150, calendar year taxpayers who want a 2021 state tax deduction on their federal pass-through entity return have to make the elective tax payment on or before December 31st, 2021. But there are two problems. First, originally, the FTB website would not allow entities formed in 2021 to log in to WebPay to make an electronic payment. The FTB has partially resolved that issue, but some entities formed in 2021 are still not in the system. The FTB expects to resolve this issue soon, but in the meantime, if an entity is unable to log into WebPay and they want to make a payment now, they should mail the payment to the FTB along with the payment voucher Form FTB 3893. Make the check payable to the Franchise Tax Board and write the business name, tax year, and entity ID number on the payment in addition to filling out the voucher. The second issue is that once an entity makes an electronic payment, the payment does not yet show up in the taxpayer's MyFTB account. According to the FTB, these payments will not be visible in MyFTB until January 2022. We suggest your client confirm that the funds were withdrawn from their bank account and keep a record of the amount withdrawn in case there's a problem later. Finally, there has been discussion about whether these payments will trigger the FTB's mandatory electronic payment requirement. Remember that these payments are payments made by the entities, not the individual owners. For entities, the mandatory electronic payment requirement applies to corporations and LLCs taxed as corporations, but not to partnerships or LLCs taxed as partnerships. For S corporations making payments on behalf of their consenting owners, if the corporation already has a mandatory e-pay requirement, the payment has to be made electronically because once a taxpayer is subject to the e-pay mandate, all future payments are required to be made electronically. For S corporations not previously subject to the mandate, it's important to keep in mind that these payments are not considered estimated tax payments, so they won't trigger the mandate if the payment is $20,000 or above, but less than $80,000. Payments made by December 31st, 2021 are not considered as part of the final tax liability, so they won't trigger the mandatory e-payment requirement there. However, they will be included on the S corporation's final tax liability when the S corporation's return is filed, so it may trigger the e-payment requirement for future payments if the S corporation's final tax liability is over $80,000 when the return is filed. If so, the pass-through entity elective tax payment does not have to be made electronically, but all future payments need to be made electronically unless you request a waiver. Stay up to date with California tax issues like this one with a subscription to Spidell's California Tax Letter. See the benefits of subscribing and join the thousands of tax pros already using this critical tool at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Spidell's California Minute.